Okay, as the slide appears up in front of your screen, next is a fireside chat. It's about the future of digital currencies in North Africa with the opportunities and the challenges. Now, I'd like to call back from yesterday the moderator from the keynote panel, Mr. Darren Franks, the co-founder, director, and interim CEO for FinTech Association of South Africa, and his keynote panel colleague, Mohamad, the CEO for Singularity Finance, who is also with Flair Network in terms of business development and project relationships lead. So, Darren and Taisir, the floor is all yours. The next 30 minutes is all yours.
Okay, wonderful. Can everyone hear me? Is this on?
This is big.
Yep, word.
Good afternoon, everyone. Last session before lunch, I believe.
Second last.
Second last.
We got one.
Okay, well,
No, it's okay, fine, yeah.
okay. Ladies and gentlemen, welcome. I'm delighted to have Mohamad with me. We had a quick chat yesterday, and we've had another chat sort of this morning as well. This fireside chat is completely unscripted, but I'm going to start with one question that I asked yesterday, and hopefully I get a better response from the audience than I did yesterday, because I think everyone was half asleep. Does anyone know here what Web3 is? Show of hands, please. Web3. We have one. Okay, fantastic.
Two. Yeah.
Two. We have two. Okay, next question. Blockchain.
Yes.
We have one blockchain. Any other takers for blockchain? Two blockchain.
And four.
Three.
Three blockchain.
Four.
Five. Fantastic. Okay.
Mistook.
Six. CBDC. 1, 2, 3, 4.
Come on, guys, we're in banking. CBDC, central bank digital currency. The e-pound.
5, 6,
Okay.
7. Fantastic. Okay. What else can we throw at the audience? Crypto.
Oh, that's a loaded topic. I don't want to be
1,
fined.
2, 3, 4, 5, 6, 7. Okay.
That wants us to be fined. Just
Wonderful.
be careful.
I'll tell you. Let's start with crypto. Can we start with crypto?
Let's do it.
Now, appreciate that. By the way, we're not giving any financial advice
And we're
whatsoever.
not soliciting crypto. No one buy crypto. We're in Egypt. It's illegal. Central bank doesn't like it. Anyone that tells you to sell it, like to buy it, you'll get fined 10 million Egyptian pounds. So don't tell anyone to buy it. That's all I'm telling you here.
So this is not
For the
financial
record.
advice. Okay. All right. Let's start. Okay. So we've got quite a crazy time happening in the world of cryptocurrencies.
Yeah.
If I look at what's happening in South Africa, where the regulator has now passed crypto as an asset category, right, an asset class. We've seen huge volatility in the crypto markets, really since they came into the market, right? And interestingly, Mohamad was just saying to me that he was sent a screenshot a couple of weeks ago, and it was a graph, and it was a downward sort of line, and he couldn't see, because it was on the screenshot, he couldn't see what actually the metrics were and what it was reporting on. And I think you like I would, think that it was a crypto coin, right, or a token that had crashed. In fact, it wasn't. What was it, Mark?
Put me on the spot, man. It was actually the EGP versus on like the USD peg, unfortunately, and how it looked and how we were losing value on the EGP. And I think with most of the developing world, and I think that's why, like, on the topic that we're talking about today is like what crypto and what digital assets offer for North Africa and the region in general. People are always looking for a hedge in any asset class, whether it's crypto, whether it's real estate, precious metals, anything that's not fiat, essentially, because losing a lot of value fast.
But there's an argument to say so is crypto, right? So you invest, should you choose to invest in a coin, there is a significant chance that it will devalue rapidly, right? With no sort of external tangible things happening in the market.
So that would take us into like a bit of like a philosophy question or like a down the line of thought where people are thinking about it from the perspective, okay, in a crypto perspective or like the tokenomics, the supply, the demand, everything is kind of like transparency. It's very transparent. People know the dynamics, how it's going to change. If there is a change on the network that affects supply or token supply or something, it's put out for a governance vote. There's a lot of community involvement. So the dynamics of the economic structure within blockchain is a bit different. And I think that's what gives way for blockchain in general as acting within a like financial medium or within the financial space in general is that it offers like an alternate infrastructure. And I think why governments are looking at CBDC as well is that the idea of how to control this supply, the economics, the ease of having a full view of like your full supply, whether it's in cold storage, it's in circulation, where it's in cold storage, how much, which wallet has what at any certain point of time. And all of that's public, by the way. Like, there are actual traders on Twitter that go on and they look at like trading wallets and they go on Etherscan and they would literally give you the address and they would kind of like for you to mimic his buy and purchasing and history and all that because it's public history, it's all on chain. And you just need an indexer, like Etherscan or any of like the scanner kind of like websites, and you can look up any transaction, any wallet with all of its transactions and so forth. So I think that power coupled with a central bank digital currency, I think that's the attraction of why CBDCs are very attractive to a lot of governments today. Whether they announce it or not, you have a lot of governments that are looking into it. I think there was the Atlantic Project or something that's called, it's an interactive map on the website that gives you all of the ongoing projects for CBDCs around the globe, and they're partnered with the UN, so it's like an official thing. And I think there is a push towards that. It makes things much smoother and friction. I wouldn't say frictionless, but less friction.
So let's talk about CBDCs from a banking perspective, again, with a focus in North Africa. Aside from the couple of points you've just raised, with the benefits, there are, I think, the general public is slightly confused, unaware, uneducated about what this could mean and what impact this means for them as individuals. If a CBDC was to be rolled out, say, for example, here in Egypt or Tunisia, Morocco, wherever it may be, what impact does that have on the general public?
I can't answer that question. And that's not because I don't know, it's just because it really depends on the structure of the product itself, how it's going to be deployed into the market.
Yeah.
Is it going to be collateralized? Is it an algorithmic like CBDC that's going to be acting as by itself, depend from the original currency? How the government decides to offer the CBDC will entail effects on the economy, essentially, and how it's integrated within the economy itself, the utilization of it, and so forth. So I really can't tell you the effects of it until I see, like, all right, this is clear cut, it's a one-to-one representation that, okay, as a collateralized stablecoin or CBDC, what would that, like, what are the uses? Is it for international transfers? Is it for international trade? So for lowering fees and costs of doing that? Is it for fees? Is it for public spending? So you can track public spending. It's really dependent on the use case and dependent on how you decide to deploy that, essentially.
There's a huge amount of regulation that needs to go behind the scenes before a CBDC can even be launched or even in beta, right?
Not just regulations, even economic, like you have to study from an economic standpoint the economic effects of deploying another asset or another legal token within the market. How is that going to affect other instruments within the market and so forth? Like in the EU, for instance, they gave way for stablecoins. Like in France, they gave way for stable coins, and I think Société Générale, they just launched their own e-euro, which is a stable coin. And a lot of the community within the ecosystem actually don't like the euro of the Société Générale because of some of the architecture design for the actual instrument itself, where they can come in and kind of like delete your holdings and so forth. So a lot of the people were like, okay, I would rather have my own euro where you can't come in and delete it than get that e-stable coin that I can come in and delete.
It was funny, I was back in the UK a few weeks ago, and I was driving on the highway, and typically in the UK we have like bridges that go across the highway, and there's usually graffiti. You know, it's, I don't know, some graffiti artist. And as I was driving, probably too fast, I just saw this glimpse, and it was too quickly to get my, too quick to get my camera. And it was in graffiti, and it said, "Say no to CBDC." And this was graffiti, right, happening in the UK. So I think there's a huge amount of work that needs to be done in terms of educating the general public, educating financial institutions, looking at sort of where fintechs can now play within that. So I think there's a lot of considerations.
The governmental entities need to kind of like decide how they're going to do it first. Then the general can decide how they're going to use it and so forth. But decision from the regulator for it comes from this is like a national, like CBDC, that's a national product. It's not it's not a stable coin that's issued by a bank, where the bank takes like the responsibility of being an issuer, maintaining the supply and so forth, and maintaining the coverage for that as well. Like with Tether, for instance, like USDT, they're a private company, they have their own stablecoin. USDC, Circle, backed by JP Morgan. They're also a private company that offers a stable, and they have their own treasury. They cover that treasury with Tito's, with different instruments, kind of like show that they have the liquidity to cover that. I think during the Silvergate and all of that fiasco that happened a while back, USDT decoupled for a little bit because a lot of these crypto companies were within those banks, and I don't want to get into the political side of that. But initially, they had to prove like their reserves and so forth. So here, it's a different story. It's a CBDC, so it's backed by the central bank, it's backed by the government. So it acts as a national instrument, it's a national product, which should not be taken lightly as well. In a country like ours, we're the 15th largest country in terms of population. We're one of the second largest economy in Africa, I think, right now, and one of the top three for definite. And I wouldn't say like something like that can be done lightly, but it's something that can add value to our economy if done properly on multiple levels, whether it's on SMEs, on international transfers, just.
Can we explore that for a minute in terms of remittance and international trade? Where do you see there being an opportunity for banks, financial services organizations, large-scale merchants who are looking to trade internationally? If there was not necessarily a CBDC, because that's perhaps separate, but if there was a platform to enable cross-border trade, migrant worker remittance, of which obviously there's a multi-billions of dollars, and if there was a platform that enabled that, that reduced the cost, reduced the time, do you see that being a sort of a crypto as an asset? Or do you see that being something different? If we were to wind the clock forward a couple of years, how do you see the movement of funds internationally?
Stablecoins.
Stablecoins. Okay.
Stablecoins. It's already being done. Like within the blockchain space in the crypto world, most of the people working within a blockchain company would be paid within USDT.
Yep. And
within 5 minutes of the CFO telling you I transferred your payroll, you check your wallet, and it's there. And you can transfer it to anyone, anywhere, at will.
It's still based on the dollar.
It's a stable coin. It can be based on anything. I can take it in crypto if I want. The thing is that the freedom of, so it should be that easy. We as within the financial sector should be looking at having our services that dumbed down. Like, it should be that logical, it should be that natural. Someone's sending you money, you receive your money, and you do anything with it. That's it. It's my money. All right? Just because I choose to keep it with X or Y bank, that's your privilege to have my money.
Yeah.
But it's my money, because if I take it out, it's off your balance sheet, you can't lend against it, you can't create more value off of it, and so forth. Giving me access and control over my money is what people are looking for. If you look at what people are looking at in the US today, people are actually calling for banks to become just a custodian and not a controller of how you invest your money and so forth, because I'm not going to say here in Egypt we have perfect control, and I think our central bank has been doing a great job of creating monitors over how banks operate. But in the US, where it's left a lot more loose, people have been doing like whammies with your money, and that's why you've had a lot of failures, you've had a lot of stacked risk, compounded risk together. We're seeing 2008 multiplied all over again. And in the EU, it's not. That's why a lot of people are moving towards that kind of like self-custody, mind control, even within the crypto space after FTX and all of the failures because of maliciousness and so forth. You had people saying, your keys, your crypto, not your keys, not your crypto. It's the same thing. And crypto here is not just Bitcoin or anything. A stable coin is a crypto. A CBDC is a crypto because they all use cryptographic technology. It's a cryptographic token. So when I say crypto, a CBDC is a crypto, stable coin is a crypto. I'm not talking about Bitcoin, Ethereum, and so forth, because when people hear crypto, oh, they instantly think Bitcoin, volatile, bad, terrorism, drugs, all that. It's not true. You already have a lot of businesses that operate with that. You have a lot of institutions related to using that as well. And I'm not saying that it should be something that it's not, but it's given way for innovation to take a new path and start exploring more. And if regulators keep on distancing themselves, eventually that's not going to stop innovation, and it's not going to stop builders from building. Would you rather them having built away from you, or would you having them build with you in partnership, with supervision? You have oversight, you can see what they're building, you can have an input as well, get something going. I think that's what's happening in most of the Gulf states today. The UAE is going to be turning into a haven, you have Saudi Arabia is going to turn into a crypto and blockchain company haven because of the mass exodus that's going to happen out of the US. And I think the rest of the world acknowledges that they're not going to wait for the US and what they're doing with crypto. Even the UK have seen that they're not waiting, because I think in the preliminaries, I think in 2024, the US is going to have a lot of things to say about crypto and regulation and so forth, because it's going to be one of the main points for the presidential election next year, maybe sure. But for the foreseeable future, you will have a mass exodus into the Gulf, and you already have a lot of international entities going to the UAE, going to Saudi. Oman is pushing for it as well. Qatar is doing something as well. So the world is not waiting.
It's interesting. About 3-4 months ago, there was a press release in South Africa again, talking about one of the big supermarket chains now accepting Bitcoin as a method of payment. And I still can't get my head around this. Maybe you can help me. Right? So if I go to this shop today, I can use my Bitcoin and I can buy a loaf of bread. If I wait till tomorrow, I could buy 100 loaves of bread with the same amount of Bitcoin. Right?
Or you could buy
I could buy a crumb.
Yep.
Right? So from a consumer perspective, do you really feel that crypto is now at the stage where people are treating it as a currency, or are they still treating it as a bit of an asset class, and it's a bit of a gamble, and I may make some money, I may lose some money, but it's just another sort of investment?
It's interesting because maybe that merchant, that company specifically, is interested in building their own crypto treasury. But already around the world today, with Visa and MasterCard, you already have crypto-based cards that you can use on the Visa network globally, just anywhere in the Middle East, including here, by the way. If anyone has their Binance Visa card that they get from abroad, they will be able to use it here, because from a merchant perspective, it's a fiat transaction. Because Visa on the other side does the conversion between stablecoin to dollar, to fiat, and the reconciliation is done through the Visa network, just like any payments instrument out there. So it's already being used, really, unless they accept direct crypto. That would mean like they want the crypto themselves because they believe in the long-term side. And I think a lot of merchants, because the halving is coming next year, so a lot of people is expecting, like, history always tends to repeat itself with crypto specifically. They're expecting that the next good, like, bull market and bull run is going to come within the next year, 2024, towards then. So a lot of people are just starting to pile up. But it's interesting to see that Bitcoin is holding, given that all the shambles that has been going on here in 2023. Since the beginning of the year, it's not been it's been an ugly year for the market, but still people realize that it's a lot of maliciousness rather than it is the technology itself. It's bad actors. And if you look at the banking sector hasn't made it easy as well globally. I'm not talking about here, but globally you have like a lot of banks at risk already. You have a lot of big banks nearly going bust, being bought out because of political support and being too big to fail. That statement right there is why stablecoins and why crypto is gaining a lot of popularity within the West. And I think according to Chainalysis, which is an on-chain analysis company, they work with government central banks to analyze, like, for AML and KYC kind of like transactions so that they identify maliciousness. So there are companies that are out there. I think MasterCard had one of the biggest acquisitions last year, I think it was in 2022, where they acquired one of the biggest on-chain analysis companies to add it to its roster. MasterCard is heavily looking into crypto payments and blockchain and preparing for the future. I think Visa's right on it at its tail, but MasterCard is definitely something like that.
Let's slightly move on. What is the connection between cryptocurrency, CBDCs, etc., leaving the blockchain to the side for the time being, but Web3, because I know that's something we were talking about yesterday on stage, and I think perhaps we just need to unwrap that or unravel that a little bit, demystify it. So where is the connection? If you could, again, because there may be people here that weren't here yesterday, if you can, in a sentence or two, demystify what Web3 is, that would be awesome. Not putting any pressure on you, but
so Web3 is basically just like the internet of value and ownership as well, as like tracking ownership, who owns what online, and being able to transfer that ownership from one place to the other, as well as like transference of value as well. So dubbing entering the internet of value. What CBDCs and crypto and what they do is basically they're the medium of exchange for that value, depending on what it represents. Cryptographic tokens can represent your identity, can represent your ownership, like an NFT, but they also can represent actual value, which is the actual dollar value or whatever value that you're transferring from point A to point B. So it's just that utility that is why CBDCs or why a crypto would exist.
Okay.
A blockchain can exist without a cryptographic token. Cryptographic token needs a blockchain ledger to exist, essentially. So it's just that transference. So let's say let's go into something like fun, gaming. I'm a gamer, I'm playing online, I have my digital assets in that game, and it's an online game, so I have a community of people that we're playing together, and it has a play-to-earn mechanism, where the more you play, the more you earn value. The way they can give you money or value, they have to represent that through an in-game economy. In-game economies, and why I use gaming as an example, because in-game economies has existed ever since gaming has existed. And gaming has been there for a while. Like Ahmed said yesterday, I also love that guy. We've known each other for a while. A lot of, I would say, informal and friendly talks about blockchain, very informative. I would say he talked yesterday about metaverses. Metaverses has existed as long as games exist. Anyone that has played a game, Mortal Kombat, when we were kids, that's a metaverse where two characters stand at each other and kick and punch each other. That's the utility of that metaverse. You can't do more with it. But today with online gaming, you have Fortnite, Call of Duty, and so forth. I think Travis Scott, what's his name, where he held a concert in Fortnite for people to attend the concert with their avatars. So they were what metaverses are changing, it's changing into a community space where people can meet online, disregarding where you are geographically in the world. So you can do more together. The rules of the metaverse will change from one metaverse to the other. Yesterday we were talking about Decentraland. Decentraland's rules is that it's basically an exact replica of the world online. So it's actual measurements, you can build actual houses, and it's to scale with the real world. That's the actual side of Decentraland. So for businesses and so forth, you'd be actually within a city, you'd be actually within like that. But you have other metaverses where you don't have the laws of physics. People can fly and do whatever they want, and it's for fun and playing around, like Minecraft. Minecraft is, or Roblox. Roblox is one of the biggest games out there. How do people get value is the underlying economy. So there are units that you need to kind of like identify who owns what, and ownership, deeds, whatever for your assets, as well as like a utility, something that's fungible that you can use as a unit of economy or currency. And in-game currency has existed, like when people will play Candy Crush. The in-game currency for Candy Crush is the Candy Crush heart. The heart is the cryptographic token. If it was a Web3 company, that heart would be tradable, and its actual dollar value is $0.99, which is actual price on the game store, today on App Store. And people would be paying to get that crypto so that they can pay to play the game. That's the utility of that. But now, I'm a great company and my game is like the best in the world, and everyone is going to want to play that game, and those hearts are finite. So that value is going to fluctuate. And that was the promise that people gave back in 2018 with the ICOs. Complete BS. It's not true. And as an investor, I was like, this is not a good deal. And I was talking back then, like, people, you need to research and so forth. And look at where we are today. The transfers of value, the function is there, but the gimmicks are dying out. Volatility is one of the things that crypto is for like traders. But will that continue within the next 5, 6 years, 7 years? Everyone knows which ones they are.
Fahad's waving his wrap-up sign, so if I don't wrap up, I'm going to get in trouble. Thoroughly, I could go on for ages. We haven't even touched on NFTs, which maybe is one for another day. But thank you so much for your insights. If anyone wants to find you, if they don't know you, because you're quite a popular guy anyway, but...
we have a question. We have a question. Yeah.
Oh, we have a question. Okay, fantastic.
We have a question, yeah.
You told me not to ask questions.
Well, we have to win.
I would actually love to take some questions, since like I'm from the outside of like the crypto world, and everyone here is like from the banking side, so I'm the bad guy coming in.
Yeah.
So I would like to see what they have to say.
Actually, I'm from the FinTech side, I tell you. We have a question.
Yes, hello.
Hello.
I'm happy to attend this discussion. Every day we are hearing about digital currency from many countries like Japan, Chinese, many countries. So I need to know what, from your perspective, what do Egypt need to do in order to implement digital currency? Especially that we can mention 3 main points to be done in Egypt to implement digital currency, especially that we have major number from customers unbanked and with the repetition for digital currency for sure. So how can we make the Egyptian consumer to trust us? Something like that.
If you look at Chain Analysis, which is a company that does Chain Analysis, one of the biggest trading volumes in North Africa is in Egypt. So the Egyptians are actually trading crypto. Whether the central bank likes it or not, they've been trying to stop it. They send money through bank transfers to Binance. Binance puts it as USDT within your crypto wallet, and you start trading. So a lot of Egyptians have been doing that over the course of the past year, 2 years. And I think every time I spoke at an event here, unfortunately, everyone that comes up to me doesn't talk to me about crypto or like doesn't talk to me about blockchain. They would stop and be like, I want to invest in crypto, what should I invest in? I'd be like, don't. If you're not willing to lose your money, don't invest in crypto. It's not a safe haven. After Silvergate, a lot of the banks, the failures in the US, it became a safe haven for Americans because they don't trust the government anymore. They don't trust the central bank there and the Federal Reserve, and they don't trust what the regulators are doing there. But on our side, it's apples and oranges, like literally apples and oranges. But people are looking for it because of the hedge against value, against the EGP. That's the reality of why people are doing it. And to have a way to earn some quick buck, let's call it, outside of like like not confined by the restrictions on the FX risk. They're earning money within another currency, and most probably because of what's happening here, actually their winnings are multiplied because of the FX risk and that effect. So Egyptians are actually attuned to using it. The question is really...
But still, two numbers, not a number. I mentioned that...
Not a lot.
Yeah.
It's not a lot, because a lot of people here still want it to be, like, I want to do something that's legal. And at the same time, one of the biggest challenges is the off-ramp. The on-ramp is easy, but the off-ramp, okay, I made winnings. How can I use it? I'm in Egypt. But I talked about this with the central bank here, actually, back in 2020, the first time I met with them. And I told them that whether we like it or not, most Egyptians are into crypto. If you give them a legal outlet to use that value that they've extracted elsewhere within the local market, they will use it because they don't want to hoard it. Most people that are mining, and we've had miners since the early days of Ethereum and since the early days of Bitcoin. Don't forget that we have a very big technical diaspora here in Egypt. Like a lot of people have been into like the IT space since the early 90s and so forth. So being that virgin, you've had a lot of miners since 2010 and 2011 in Bitcoin, and since 2015 and 2016 in the period. So you've had a lot of people that have been engaging that. So they have a lot of value built up. Can they use that value here? No, they can't. Is it of real value? Yes. I think back in 2019 or 2020, there was a piece where it said that our government was mining Bitcoin. I don't know if it's true or not, but governments around the Middle East have been trying to extract value through cryptocurrencies as well. Opening that door up for your general public will get that value to be utilized locally. How most of the world is looking at taxation, how you tax that crypto and extracting more value. The US is looking at legalizing it, and it's a bipartisan kind of like feud, because some want to tax it and extract more value for the government through that, and others just don't want it there, and they're trying to get that. So it's really, back to your question, Egyptians are using it. It's how the local market wants to regulate it and regulate its existence, because it is another legal tender. Is that okay? That's the real question that I'm posing, honestly.
Okay. Here he comes.
Yes? No other questions?
No, we have to move on.
You
spoke too much.
It was fascinating though. Thank you so very much. Thoroughly enjoyed the conversation. I think next time we'll talk about utilities of cryptocurrency and how we can solve financial inclusion as well, so that's going to be an interesting topic. Ladies and gentlemen, thank you very much.
Thank you, Darren, thank you, Mohamad. Right, now moving on.